Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, July 29th, 2025. It is 12:04 p.m. as I'm starting the video. What I'm going to do is just kind of talk on the charts and the things I'm watching this week. I want to reiterate that this week is a it's pretty much everything week. I can't recall in recent months, even recent years, how many potential catalysts or big market moving potentially, again, potential, some things are non-events, sometimes they have the potential to move and it's a non-event, but how many big potential market moving things are on both the economic and earnings calendar this week. So to reiterate, we have well, here, let me start with the economic calendar. We'll go there. Of course, remember, you can access this on right side of the chart. Just go to the top menu, click on resources, then go down to tools of the trade, and you'll see the economic calendar. You'll see the earnings calendar. I'll zoom in a little for you here. Tuesday's out of the way. So here's what we have this week. Tomorrow morning, we have ADP employment report. They don't have it red starred, but that always has the potential. This is everything right now. This is what has perplexed economists, perplexed me, others. The consumer has just been extremely resilient, and that is what's kept, kind of the economy going, kept the markets going. Remember, consumer spending is about 70%, over 2/3 of GDP comes from consumer spending. So as bloated as our government is, and as much as they spend, it's the consumer that will ultimately drive the economy. And so we'll watch that one. And then just to follow up, we also have, let me change the color here. I'll make this red. We also have jobless claims on Thursday. So that's going to give us kind of a better idea. And then the employment situation on Friday here. I think it's just cut off on the side of the screen, but you can see it there. Okay, so a lot there. Now, additionally, tomorrow, GDP at 8:30. So you can see there's just a whole lot of stuff on the calendar right now. You know, this wouldn't probably have been red starred a year, 2, 3, 5, 10 years ago. But treasuries, as I've been stating repeatedly for months, our long-term treasury bonds, the 30-year bond, is still within what I call spitting distance of not just a new 52-week high, but if it takes that out, then it's has the potential to hit multi-decade highs. And like I said, my jaw would be on the floor. I'd be shocked if the market didn't react to the 30-year long bond breaking out to multi-decade highs. So there's a lot, again, potentially on the calendar this week. PMI, ISM manufacturing. You can take a look at the calendar. All right, and then you have earnings calendar. Remember, this is also accessible on the site. You've got a lot on there this week, culminating with, this is just the end of the week here. You have the big, couple of the big ones, Apple, Amazon. Remember, you're going to have this is Thursday after the close. Wednesday, you're going to have Meta and what was it? Let's go back here. Why am I drawing a blank? Meta and Microsoft, of course, and some other big names here. So, okay, point well said. We'll see where we go. And again, that's what's on the economic and earnings calendar. We've also got Trump's trade deadlines coming up August 1st. So there couldn't possibly be more on the calendar this week. Or again, another way to say it, one of the biggest potential weeks in a long time. Now, where all that goes is, let's talk charts. Okay, nothing on the longer term charts. The technicals haven't changed. We continue to walk up. When you look, whether you're looking at the weekly or the monthly, we have the rare, as I've said, very rare. Hardly do you ever see these divergences on the monthly time frame. And again, I've said this repeatedly many times, divergences are not buy and sell signals, they're conditions. They are conditions, be they positive or negative divergences, i.e. bullish or bearish. Conditions that will typically, and most often, not always, but most often, proceed trend changes. And also, typically, the bigger the divergence is, usually the bigger the trend change. So what we need is our sell signals. So we've had, as I've been talking about for a long time, marginal new and still divergent high. We're back testing. This is the uptrend line, the very key uptrend line off the early 2023 lows in QQQ, the green one I just drew. So we have a breakdown and a back test of that trend line. And so if the technicals come together, and again, you can back test. I always say the problem with back testing a trend line, if you're looking at, let's say, to short a back test of a broken trend line, the problem is you can continue to back test for a period of time. And every day that you back test an uptrend line, prices come in at higher and higher levels. So what you need, and this is the levels I gave you recently on the 60-minute chart right here on QQQ, we need to take this out. I will put a little asterisk in there right now that any breakdown that occurs before Friday, because remember, that's what's going to, when all the bulk, not all, but the bulk of the economic reports and all the big earnings will be out of the way by Thursday afternoon. So what I'm saying is, take it with a grain of salt. Not that it's, breakdown is a breakdown, and it's not to say that it couldn't take us down to these next targets. I gave you targets the other day. Where were they? This board right here. These are some near-term levels. I could put some little micro levels in here. Sure, we can play around with that. But let's see what happens. And again, there's the trend line. That's our current trend line. Give it to you on NQ as well. The NASDAQ 100 futures. You can see it right here, nice and clear. Little cleanup trend line. You want to replicate that. I'm using 2-hour candles. You could do the same thing on a 60-minute chart. That's your divergence line up top. And we've been diverging since this point back here. And this was our initial trend line. We broke it. We've kind of been moving sideways, which set up this smaller wedge. So that's my outlook and view of the NASDAQ. The S&P 500 is in a similar technical posture, just walking its way up. Let's see if I have a board marked up. Yeah, there it is. There's your trend line. There's a little wedge pattern. Divergence just continues to build, and that's it. On the daily chart, this is what it looks like. Turn off all the lines. You can see a marginal new high right here over the previous highs on virtually no volume. Divergences right there. And again, I have my low volume indicators firing off, warning signs when volume drops to a certain level on the indexes. And breakouts that occur like this with low volume and negative divergences have a very high rate of failure. So my degree of confidence is every bit as high as it was back here when we went long off these lows, covered our shorts, started reshorting at the 200s. And I said, look, if we go through there, something else is going on. So that was the no more shorting line for the long-term trades. And that's, increases the odds. We'll go up, make a marginal new and divergent high. And then if so, that would set the stage then for a failed breakout, which has been the MO for this market for a long time. Breakout to new highs, make a marginal new high, just like you did right here. That was a breakout, failed breakout, marginal new high over the previous high, big drop came. A lot of times we've seen that in recent years. We saw the same exact thing back here, back in 2021. There was a marginal new and still divergent high on SPY. Here, I'll turn all my lines back on. We covered it at that time, and that gave us that bear market we had back in 2022. So, all right. And again, the point of this is if there is going to be a fundamental catalyst, technicals are what I just showed you, the trend lines in QQQ and SPY and NQ. That's a technical catalyst that can trigger the selling that I've been expecting. And the fundamental catalyst could be any or all of the above what's going to come out this week. And remember, I say this often, but if you're new to the site, when it comes to earnings, I'll go back to that earnings calendar. It is not about what they report. These companies, when you are a $1 trillion a $1 trillion or three, in some cases, in the video, $3 trillion corporation, you are in the business of managing earnings expectations when you're playing at that high a level. So sometimes these companies will miss one here, there, top line, bottom line, rare, and sometimes they miss and the stock still goes up. what I was going to say is more often than not, these stocks are they manage and tend to beat expectations. So it's not about, I put zero stock into whether they beat. All that matters to me is the market's reaction, what's already been priced into these. So again, watch. You got a lot of big names reporting this week, and the important thing is not what they report. They're going to report, as they always do, record earnings. It's kind of like when Tim Cook does the dog and pony show every year for Apple. Oh, this is the best iPhone we ever made. It's the fastest and greatest. Of course it is. You think you're going to put a slower processor in a phone or have less features? So everything's always better. And these guys are always going to beat. They have a record quarter. God forbid they ever really stumble. But so... All right, that's it. Remember, it's the market's reaction to earnings and not what happens in the after-hour session when they report, but what happens in the following days to week. So Friday, we hopefully will have a good idea which way this thing's going to break. We're going to continue to trend up or even start to accelerate up in some kind of blow-off top fashion, or if we're going to start that long overdue correction, or what I believe next leg down in longer term trend reversal. Okay, and UUP is a good case of the technicals playing out as expected. We had been highlighting for the last couple of months this multi-year trading range on UUP, the US dollar ETN. It tracks the dollar index. It's this box right here. Highlighted that the first time we hit. Got a bounce there. As expected, off the initial drop to that level. We hit the first resistance level, 28, fell back down, and then more recently I've been highlighting it setting up in this bullish falling wedge pattern with this downtrend line there, the positive divergence, and then the breakout. And we had the initial after the breakout. Remember, I addressed this. That wasn't a failed breakout. That was an intraday pop that closed back below the trend line on this daily chart. So that was not a false buy signal. It would have been had you closed the dollar above there. This was our breakout, initial leg up. Nothing goes up forever, initial wave of selling, and now we have a new high. It's not much, but it meets the technical definition of an uptrend, which is a series of lower lows and higher highs. We'll see if that continues. I don't see why not. Take it up my first target. As I said, gold and Bitcoin are both, over time, there are periods of disconnect, but over time they are negatively correlated with the dollar. Meaning gold and Bitcoin go up when the dollar's falling, and they tend to go down when the dollar goes up. So nothing's changed on that outlook, other than we did have a gold breakdown recently. Let me give you GC. I like the futures for charting importance here. This is GC right here. Same chart I've been sharing with you, and there was that uptrend line. It generates from the left of the chart here. I can only go back this far. This is a 6-month, 2-hour candles on this chart. And we broke below the trend line the other day. That's a sell signal. We hit my first target, support, more of a support level, 3302, give or take. And so if and when that goes, that should open the door to the next leg down. And we should start to see some selling accelerate in gold, most likely. Remember, with the dollar, not everybody does this. So if you followed me for a while, you know I always say that I believe that any analysis in gold or silver, GDX, is incomplete without looking at the dollar. And so what happens, a lot of people don't, especially retail traders. They buy gold because Kramer, whoever told them to buy gold, and that's their reason, or whatever article they read in Barron's. But so what happens is, once this starts right now, to the layman, even if they're watching the dollar, they might say, okay, it's just another hiccup. We've been having these little hiccups recently. If this continues to go up, so they're dismissing this move in the dollar, most likely. Gold's down, but it's not down a lot. What happens the further you go up, and say you hit my first target, and then let's say you go on, you take that out, that's resistance. You start moving up. The higher we go, it's incremental. Every tick higher, more and more eyes are going to realize that. And again, there's also that fundamental impact. The whole reason that inverse correlation exists is because when the dollar goes up, it takes fewer dollars to buy an ounce of gold. And when the dollar drops, it takes more dollars to buy an ounce of gold. That's why a falling dollar makes the price of gold go up if you freeze supply and demand. And again, so those periods of disconnect I talk about where sometimes you see a falling dollar, but yet gold's not going up, or you see a rising dollar and gold's not falling, that's because there's overwhelming selling or buying in gold that's offsetting that impact. But again, the reason, the logic behind what I said, that's immutable. Yet that's not debatable. It's a known it's a set fact. Again, dollar drops by, let's just say 50%, takes twice as many dollars to buy an ounce of gold. That's why the price would theoretically double, right? All right. So, and of course, dollar doesn't move that much, but there's the impact. All right, let's move forward. And again, same thing. I've showed you a chart where it shows you Bitcoin's the same thing. Bitcoin's nothing. It doesn't even, there's other variables, of course, with gold, such as energy. That's another thing. Rising crude oil is net bearish for the miners. Not necessarily gold, but more so for the miners, because their second largest expense behind salaries, just like the airlines, is energy costs. At gold, like I always say, this isn't the gold rush of 1849 anymore, where you're just skimming it off the creek beds. We've long since stripped the surface of the earth of the easy takings on gold, and it's very energy intensive to pull it out of the ground. So that's why when you watch, there's GDX, by the way. So that's why I keep an eye on crude oil, and when crude oil is going up, when it's in a range down low, it's not a big deal. But when you start to get into my zones here, and again, these zones were created for the stock market: yellow zone, orange zone. I've highlighted this. You get to the orange zone, stock market will usually correct shortly after. We're powering back up to that level again, so there's that too. And that has an negative impact when we get to these levels here on both the stock market and typically on GDX as well. All right, let's see what else I want to cover for you. I'll do a quick run through on the FANGs, the Mag 7, Mag 8, 10, whatever you want to call it, and then we'll wrap it up. There's QQQ on the daily chart. Again, you can see that same trend line I give you on the 60. It's nice and clean. Clean meaning well-defined. Lots of nice clean reactions on it. That's what it looks like on the daily chart. And as I said, these are your targets I laid out for you recently, the current targets for a swing trade, pullback trades. There's the 200-day moving averages come right in at T3. So this is what I'd call, if we get a half decent sell-off, what I'd call a high probability target, meaning a very good chance of being hit. Of course, the odds are going to be higher to hit the early targets in reverse. And so I lay this out for both you long-term, those of you that are longer-term bullish and expect, the market to go up considerably from where we're at today by the end of the year or going forward. These can serve as pullback targets. Maybe you believe the market's going to go a lot higher this year and into next. However, you're also of the mindset, look, we've got to have a healthy correction first. I'm not going to buy at these levels. And these are your pullback targets. This would be a golden opportunity. Even if you're a short seller, just to game a bounce, if we drop all the way back down here to T3, which is price support, it's about 5, 10 and a quarter, give or take. You also have the 200-day simple and exponential moving averages coming right into that level as well. So that would give us a drop. And remember, the most important thing in trading is have a plan. And again, if you haven't been doing this for a long time, I've been doing this for a very long time. As I often say, one reason I love short selling as much as I love buying stocks is stocks tend to fall a lot faster than they rise. And it is more than common to wipe out in a matter of mere days or weeks, many weeks or months of gains. And that's the norm. So where we're going is, you've got to move quick. If we have a drop, that would be about a 10.5% drop from where we're at right now to get down to those 200-day moving averages. So if your plan is to buy there, obviously you could have a buy limit order set good to cancel to buy if you get there. But you might want to have a plan. And if you're long, you may not get there. So again, these are targets. Maybe you hit the earliest target and go on. Maybe we hit the second target and go on up. Or as I've been saying, if we take out this zone here, the odds for my longer term targets on the weekly chart being hit will increase exponentially if and as QQQ drops down below this range. That's kind of my lights out level. The last time I gave you a lights out level was back here, right before Trump stepped up the podium on liquidation day. I had a technical level, it was based on technical analysis, said if the MQ futures drop below there, that's my lights out level. And wherever that was, wherever liquidation day was early, but it was, or back, was it in March? Either way, right here, I think the end of March, early April, and boom, lights did go out. And however, we quickly took advantage, covered shorts, went long, because that thing had played out for the reasons stated at the time. So there's your technical update. Anything that stands out, let me think. Carvana is on my radar again. Carvana put this big divergent high, recently took out this, broke below this wedge, isn't doing much, but it's on a sell signal. It follows that divergent high. I think we have earnings coming up soon on Carvana, if I'm not mistaken. Let's see, we had earnings right here. Earnings right here. I think you can see the little E's, so that's the way I figure this out. Sometimes they don't. Oh, there it is. Oh, right here. Oh yeah, they're about to report. I'll play that game I like to play. Odds are pretty good so far. We've called most of these down or up. Carvana, based on this, the fact that it's broken down following the divergent high, says most likely to the downside. We played it on earnings back here a couple earnings reports ago. Made a nice quick trade, got out, hit the target. I don't know if that was based, I think, on the 60-minute chart right here. T1 zone hit, that will hit target. This one was hitting after hours. That was the last previous earnings. So yeah, it was the last two earnings. Yep, we shorted it here before earnings. I said it's an aggressive trade. Hit the target. And this one we hit the first of 4 targets I gave you in after hours. And it was a quick, I think it was like a 10% drop. So worth covering. And that's also another strategy is when you're trading around earnings, I like to have my, as I often say, my profit taking orders, whether I'm long or short, allow those to be filled in the outside of regular trading session. Every broker calls it different. Interactive Broker says outside regular trading hours, meaning the pre and post market sessions, because quite often those spikes following earnings, whether they're up or down, get briefly faded. So you'll have the big moves and the targets are hit in the after hour session, but never again in the regular session. That was the case right here. And my goal in every trade is, number one, to hit my profit target, and number two is not to be stopped out. So I don't allow my stops to be filled in the outside the regular trading session, because I don't want around earnings. If I hold a stock in earnings, because I don't want that post earnings noise and when low volume after hour session. I don't want them to take me out on some errant little spike that gets reversed. But I do want to have my price target hit. And so that's what I like to do. So there's the current technical posture, Carvana. And let me just run through the fangs real quick, and I'll wrap this up. All right, so I need to Q in QQQ. And then it loads my watch list sorted by market cap, with the biggest one being NVIDIA. As I told you recently, we had a sell signal on NVIDIA for the first time in a long time. We had a breakdown, very nice, clean breakdown, impulsive. The day it broke down, we were right at that gap backfill. I said most likely they're going to come in and buy it, which is exactly what they did. I would have been, surprised, not shocked if they didn't buy the gap backfill on NVIDIA, crowd favorite. And since then, it's simply back tested the trend line from below. And as I said, that's what happened. You back test, back test, back test. And a strategy I've shared with you many times over the years, something I've just learned from doing this for a long time, is that the problem with shorting a back test is you can continue to back test. However, what I like to do is, or what I like to see, is a impulsive rejection. So I'm trying to, let me change my tool here and do a frame. So after back testing, whether it's day 1 or day 30, I like to see an impulsive rejection, a red candle. So that's what I'll be looking for on NVIDIA to say that the back test is most likely over. So far, they have not rejected it. It's been creeping up from underneath there. And so an impulsive big red candle, And as I like to say, the redder the better would be good. And or, as I said the other day for last week, a break of the lows, not just NVIDIA, but every stock from that day. That was an important day. A lot of stocks hit support on last Tuesday, the 22nd. So those lows need to go out to open the door for more selling on all these guys, including Microsoft. See, same thing. Microsoft broke down. These are the same trend lines, guys. This is why I haven't done a lot of updates recently. There's not much to update. If you replicate these charts, we broke down and we've been back testing from below on virtually no volume, very small candles. Volatility's low because everyone's waiting to see what these big companies report, what Powell says. Is Trump going to chicken out again come August 1st? All that stuff is just kind of putting the market in this grind. But, a big but. We have sell signals, and the technicals are right there. That's the two largest. NVIDIA is the largest company out there, 4.2 trillion. I said three, I'm sorry, 4.2 trillion. Microsoft, 3.8 trillion. By far the two largest companies in the world. Then you have Apple coming in at, Alphabet, you have to add up both share classes. So Alphabet's up there too, probably above Apple. Apple's 3.2 trillion, right on the trend line. Amazon right there. I have alternate trend lines, but this is what I call. So this was my primary trend line right here. You can see this one. I have two coming off that low. And we broke down and we've been back testing from below. Pretty red rejection candles. What I've done, I noticed I could draw a trend line right there. I just extend it down. And this is what, if you followed me for a while, you've heard me, it's another made up term called my BOD trend line, benefit of the doubt. When I have two support levels, be they trend lines or horizontal support in close proximity, better, especially in a strong uptrend, give it the benefit of the doubt. You want to see that second trend line broken. So right now that's this one here, the lower of the two. Alphabet, this is Class A shares right there. There's an uptrend line. And again, this one's back testing this long-term uptrend line right here. It comes off the January 2023 lows. That's when about all the fangs bottomed. Breakdown, back test, first back test actually of that trend line. So looking for a rejection there. We'll know soon. Let's see, or hopefully we will. This one actually just reported, but still below the trend line. Meta, about to report, coming off that divergent high right there. Remember, divergence is not a sell signal, but we did have a break of that minor trend line. And it's been flirting with this 707-ish support for a little while. So we'll see which way this one goes after earnings. Broadcom, just kind of grinding up with the divergence in place. Big negative divergence. But again, divergence is not a sell signal. We need to see something that, especially a breakdown of the, this was our previous highs right there. So this is a breakout to new highs. A solid move down below there will mean that breakout failed. And that's what I'll be watching for on Broadcom. Tesla's in this symmetrical triangle pattern right now. Obviously bullish any upside break as if it sticks, and then you have price support there. Obviously a failed breakout in either direction is going to usually send you the other way. But this is pinching. We're at the apex of this triangle now, or very close to it. This thing's about to break one way or another. You want my 2 cents because it's index, it's a top component. If the markets, if the big fangs crap out, again, my technicals are the same on the long-term charts that they were weeks and months ago. Just that divergence has grown bigger. So therefore, I'm still looking for the downside and next trend lower. And again, if there's going to be a technical or fundamental catalyst, I can think of no better week than this week. If it doesn't happen, it doesn't happen, and you don't get those sell signals. I've made it very clear. I think it warrants the RR is favorable to be short right now, despite the current trend, but not aggressively short. You need to see some half-decent sell signals, and I just went over what those would look like before considering, in my opinion, before considering an aggressive short position. There's just absolutely, you just can't make the case otherwise to be aggressively short now. But remember, things move fast. When things crack, when these what seem like unstoppable uptrends, where a stock or the market just seems like it'll never go down, it goes up day after day after day after day. When the turn comes, especially in the more powerful uptrends, it's very fast. And if you blink, sometimes you miss the or if you wait too long, you miss an objective entry. So that's all. Just have your ducks in a row, set your price alerts, have a trading plan. Yours might be completely different from mine, and that's why I do these support levels, targets, because if you are bullish, those same levels that I'm looking to crack to add to short positions or maybe to cover shorts on, you may be wanting to wait to buy, go long on a pullback. And that's it. So let me stop it here. I'll probably do a separate video to update some trade ideas. People, you can see in the comment section, people have been asking about natural gas. I put some charts there. There's just not a lot that I'm excited about right now, individual stock wise. Like I said, let's watch the markets this week. Lots coming up on the calendar. All right, I'm going to stop it here. This has been Randy Finney with Right Side of the Chart. Have a great day.